Yes, you hit the nail on the head when you said the story is the growth story, right? It is not just the last couple of years. If you look at the last almost a decade, growth is what has been evading this bank, and this is something that we are trying to bring back. And we have in the quarter been fairly successful. In fact, if you look at our trajectory in the last 3, 4 quarters, we have been continuously pushing the growth up. And like I said, this quarter growth is the story, and the total business growth, if I may say, is at 11.40%. Particularly in the investor community, is that the resource raising capacity of the bank, the deposit mobilization, which was underperforming the market substantially. And let me tell you, 12.32% is where we stand on the deposits. And I'll add icing on the cake, the CASA, which again is an industry concern. We have been able to revive it, and 9.3% quarter-on-quarter growth. In addition to that, a 92 basis point up from the 32. CASA share is up 92 basis point from the 31st of March 25. And in the quarter itself, we saw a reversal of our uptake of 58 basis on the CASA share. So that is the story, Harsh, of the bank today. And of course, on the profit side, the highest ever, 318 crores, and the GNPA is the lowest ever. It's almost touching 1%. And like you mentioned, the ROA is at 1.85%. So pretty good, satisfying numbers when I look at it from the TMD's angle. Yes, Harsh.
So I want to unpack this. Apologies for interrupting. I want to unpack this. I want to understand what the next 12 months hold in store. You guided last time, if I recall right, 13 to 14% last time we spoke. Does this 4% QOQ power, and this is Q2 numbers, right? Q3, Q4 will likely be stronger because they are seasonally stronger quarters in general. Does this mean that over the next 3 to 4 quarters, you will likely drive growth much faster than the 13 to 14% number that you've guided? You're well capitalized. You're at 30% capital adequacy. Give us a sense on that one metric. Does growth behave faster than the 13 to 14% guidance?
Yes, Harsh, if you look at the trajectory in the last 2, 3 quarters, it has been trending up.
Yes.
And let me tell you, it will continue to trend up. And on the deposits, I did mention 11% last time. And now I'm saying it will be 12 to 13%. Growth will be 12 to 13% in the current year. When we close it, it'll be somewhere between 12 to 13%. And on the CASA, 9.3%. And when we close the year, I'm looking at least 12%. And on the advances side, though we look at a 10.34%, so year on year in the second quarter, I'm still confident we will be about 14 to 15%. So that's the number. And going forward into the next year, I find both the deposit and advances going up at least 1 to 2% over what we have achieved in the current year.
Perfect. So you've given FY20.
4%. It is not a flash in the pan. It will be sustained.
Understood. That's great guidance because that gives us visibility for FY26 and FY27, 1 to 2% faster than what you did in FY26. And this is regardless of market, sir, or you expect that credit growth itself will be higher. And if the credit growth is maybe 11 or 12% for industry, this could also surprise on the upside further, if at all. Is it benchmarked to the industry growth at all?
What we said is that, what we initially said that in the current year, we will be aligned to align both the credit growth and the deposit growth of the industry. And I think we are slightly higher than that. When we close the year, we will be well higher than that. And, next year, I'm sure, irrespective of where the industry stands, my guidance remains.
Understood. Point fully taken. Now, sir, let's talk about the other 2, 3 pieces. One is margins. You've just seen a 1 basis point drop in margins, likely driven by CASA, which went up 5% QOQ for you. So cost of funds obviously has not inched up as much as one would expect, or in fact has inched downwards. Do you believe that this is the bottom when it comes to margins if there is no further repo rate cut?
Let me put it differently. Yes, repo rate cut would impact the margins going forward. But what has also impacted, as you put it, the 1% cut that happened sequentially over the last few quarters, right? And our deposit base, when I look at the maturity of my deposit base, it's in the 1 to 2 year bucket, which is of course a fixed rate. And it takes time to sort of get repriced. In fact, it takes about 3 quarters to reprice. Whereas my advances, sort of comes down. And this has impacted the NIM. NIM, you look at it as 3.83%, right? But now the repricing is slowly beginning to take effect in the deposit portfolio. And I'm looking at, closing the year with a NIM of 3.85%. Maybe about plus or minus 5%, I think more upward bias.
Okay, so you'll close the year at 3.85. Is that the right way to look at it?
Yes, yes.
So no major movement on the margin number is how I would anticipate H2 to play out. No major ups or downs.
In fact, Harsh, like I said, as the repricing takes roots in the deposits, which I said, 1 to 2 year, we are seeing a reprice happen, and that will play out over the next 2 quarters, and that benefit will come into the margin. That's why I said, 3.85% at least we will maintain.
Okay, and how much would that be, sir, on the upside? So you've given 3.85 as the floor. What's the upside like?
Don't take words out of my mouth. It's about 5%, right? 5 basis point.
Okay, point taken. So let's talk about GNPA and the absolute GNPA number. When I'm looking at that number sequentially, it's contracted from 550 crore to 474 crore. This is for viewer context, obviously. The net NPA absolute number has come down from 147 crore to 122 crore. So you're seeing sharp shrinkage on both of those metrics. What's driving that? Is it recoveries? Is it upgrades? And can that continue into the rest of FY26?
It is a combo of both. Recoveries and upgrades is not as much as recoveries, it's largely recoveries. And let me also tell you that I'm at 1.01%. And the next quarter, when we meet again, I'm sure, Harsh, we will meet again. And you will see me well below the 1% mark. And the year, we hope to end it with, we have already lined up certain recoveries. That's where my confidence comes in, well below 1%.